This is London with MarketHedge. We're going to go over Bitcoin. I'm going to talk about a Hail Mary. Is there a way that we can get to the upside? You guys know this specific trade was 220 or 230 G's in the money. It is paltry. $94,000. You guys know yesterday we had a different trade that was over about 10 G's, two of them stacked. What am I doing? Let's talk about it. This is London, former hedge fund owner, private, non-SEC, not financial advice. Now, you know I want this bull flag to play out, period. You guys know that. I said I'm going to push it to the max. If it all goes down the drain, hey, it failed to perform. Can we agree? Now, what is the exact pattern? What are we looking at here? I'm looking at the following. In terms of that bull flag, I want to repeat the preceding move from the low to the high. Do you think I'm the only one in the market that wants to repeat this? No, it's a standard pattern. Bam. To the upside. So what am I looking at? Where's my 135? Bitcoin. You're not treating me well. You're not treating us well. We're a little bit agitated. Now, did it give an indication of a move to the downside? It did. We're going to talk about the Hail Mary in 1 second, but we want to line out here. Had a bit of a diamond pattern on the daily. We agree? You guys draw that out nicely if you'd like to. What is the save? What's the potential Hail Mary here? Let's talk about it, guys. Let's talk about it. In terms of, you see the bull flag that's kind of drawn out now. I'm going to call this more of a falling wedge. Let's go ahead and park this the way it needs to be parked. In terms of the technicals, shout out to the VIP. You guys were working on those trade rooms. Trade rooms incoming. They're just there, but I got to tell you, I don't want to launch VIP channel official before we really structure out how to get in, who's getting in, what all we're doing. It's going to be rocking and rolling. It's going to be nice. These are good times. So in terms of this, let's look at the failed falling wedge. Let's do this on the 4-hourly. Why do I like the failed falling wedge? Because to the extent that we get underneath, I like this upside apex as a target. Why? Because it's a demand agreement between the buyers on support, the sellers on resistance. Literally, there is a calculated price in time, literally, at which there is a result of a demand agreement or equation. So if we can get under this, further under it, I like it for even potentially, dare I say, heavier entries back to this level. Now, knowing that this is a value zone underneath this on the 4-hourly, what else do we know? Well, sometimes this likes to hammer to the upside like it should have at some point, but it somehow is better established now, I'll say, with this level of support, right? And now that there's a distinct level of resistance across the top, which, given the fact that it pushed a few times, wasn't as clearly evidenced in the market. So we have a bit of advantage from having gone down again. I'm looking at a value zone big time value zone underneath this specific apex of 112. I'm not just talking, guys. I'm trading. Now, in terms of the details, let's discuss one additional thing. What has Bitcoin started to do? Bitcoin has started to pay on the hedges. On what time frame? On the 4-hourly. Let's see if I can pull this up on MarketHedge. We'll revisit, if need be, this specific hit on the 4-hourly oversold. You guys got that? The oversold line here on the 4-hourly. Let me go to that time frame. But what is the 1, 2, 3 punch here? What can happen, right? Well, when we hit oversold, and you're going to see the price from that RSI equation on the specific chart 114, what happened? We pushed down, right? So one thing that can happen when we hit oversold, first thing, we can go further oversold. We agree? Yes, that's the first thing that can happen. The second thing that can happen is we can traject up. Bulls can take control. We can go to this midline, right? And then we can return to oversold. We agree? Yes, that's the second thing that can happen. What's the third thing that can happen? Well, bulls can push back up to my upside target on the line of resistance. You got it. That third possibility is, well, we get a good swing trade in from the oversold to the overbought, and we make some good cash on longs. And remember, I'm looking this as a value recoup zone for a throwback. Okay, we'll discuss that. You guys look at the chart, or look at the video from a couple of days ago. So that 1, 2, 3 has me already prepared and situated with heavy cash reserves, to the extent that if we don't go up, I'm okay. Guys, I've got always never overexposed. I'll say this: don't ever be exposed to any higher price, any specific trade, and always operate with heavy cash reserves. You know that. Now, looking at let's go ahead and look at the 4 hourly. Let's throw on, and we do have the specific. Let me get rid of some of these lines here. Let me see if I can delete this. Where are we at? Where is that specific? There it is. Okay, I got it. We're a little condensed. I'm trying to bring you guys both sides of the equation in terms of two charts, dual charts, and I can show it on the right, a little bit less complicated on the left-hand side. So, looking at the Bollinger Band, what is our what's the mantra on the 4 hourly? What's the key focal? Okay, the 20 moving average. It's that orange line. Now, what paid like clockwork along the top, guys? Big time. Hedges, targeting the specific. Whether or not you're over, we would target short. Whether or not we're under, we would target long. So over, we're targeting short. Under, we're targeting long. And I'm talking about, guys, this thing printed cash along that 20 moving average, using that as your hedge line, right? That's your hedge, that's your focus. You're hedging the 20 moving average. So what has begun again? Well, the traders have started making money again. New York guys in the house, trade desk, hedging short, over, long, under. What are they hedging? They're hedging that 20 moving average on the specific 4 hourly. So you say it's a Bollinger Band, you can say it's a 20 moving average, but it's in play again. Now, one more detail, and I have that on the right-hand side. It's in the blue and orange. It's a multi-time frame derivative that I have extracted there in TradingView. It may look a bit complicated. It's the yellow and the blue lines are the 4 hourly, and I can view that from any time frame. So, taking a look at the details again, let's go to one more issue I want to tell you technically, and shout out to all VIP guys. Shout out to J-Mac, to Luke, especially. Luke, what's up, my brother? Hope you're doing really well. And let's say Chris, it was nice to touch base with you. J-Mac, of course, always. California, what's up? In terms of the details, let's look at this. You guys will be back in the back soon. Looking at this parallel carry down, the specific indicator on MarketHedge, these parallel line functions, which you can get under the f of x function. I'm going to encourage you guys to look at this line here, do a parallel carry down, and you're going to see why that line is on your chart in the 4 hourly. It is a technical line of consequence immediately in play. You're only gonna find that line auto drawn for you on the specific 4 hourly with the specific parallel line function on MarketHedge.pro. To the extent you want to take advantage of that, just go check it out. It's under trading. Guys, this is London with MarketHedge.pro. I'm looking for that Hail Mary. I'm looking for the Hail Mary. I want to see that value zone operate. That's fine. Orders are stacked underneath the specific falling wedge. Typically supposed to be a bullish pattern, so to the extent that we can get under here again, we're going to have an upside target. I'm excited about the process of Bitcoin. Still waiting. I'm still going to wait for that 135, see if it can ring the register. This is London with MarketHedge.pro. Thanks for spending some time with me today. We'll talk to you soon. Take care. Bye-bye.